In this video, we are going to break down the differences between VA and FHA loans so that you can figure out which one is best for you. A lot of people get confused about the differences between these two types of loans, so I'm going to clear it all up for you. And so by the end of this video, you'll know exactly which type of loan is the one for you. Hi there, my name's Megan, and in this video, I'm going to talk about the two types of home loans, FHA and VA loans. And on this channel, we share information for homeowners, homebuyers, and for the loan officers and realtors that serve you. If you're new here, we'd love to have you subscribe and give us some feedback in the comments about any questions you have around FHA and VA loans. So when it comes to purchasing a home, there's a lot of loan types out there, too many to choose from. FHA and VA loans are two of, I would say, the most popular loan types available today, but deciding which one is right can be difficult. The video is going to walk you through the pros and the cons of each type of loan. We're going to compare some differences and help give you a clear way to try to decide which loan type is right for you. Let's start off by doing an overview of FHA loans. So FHA loans are government-backed loans that require only a 3.5% down payment. Government-backed means that a bank lends the money, but the government insures them to make it a much safer bet. FHA loans also have less strict credit requirements than many other types of loans, and which makes them ideal for first-time home buyers or anyone who's maybe had some credit issues or lower income. Now, on the other hand, FHA loans do come with some certain restrictions, such as you have to live in the home as your primary residence that you're buying. And you have to pay mortgage insurance premiums monthly throughout the life of the loan unless you're putting more than 10% down. But the flip side of this is that anyone can qualify and use FHA loans to purchase and use the benefits of the loan when purchasing. You don't just have to be a first-time home buyer. If you'd like to learn more about how to use an FHA loan to purchase your next home or just understand some of the unique rules, guidelines that come with FHA loans, make sure you go and check out our ultimate guide to FHA loan. We left a link in the description so that you can go and read it. Now, the one caveat to FHA loans is that when we're talking about veterans, anyone who has earned the right to use their VA benefits and qualify for VA loans should consider a VA loan over any other type of financing, including FHA. Now, unfortunately, there are many loan officers and banks that do not understand the differences in these mortgage types, and they unknowingly use an FHA loan with a qualified veteran. So keep watching to understand why FHA loans should only be used if you're a veteran as a last resort. Now, let's talk about the types of VA and FHA loans. So FHA loans have an FHA purchased, which is called a 203B. Then they have an FHA refinance, a full refinance or cash out refinance. Then there's an FHA streamline refinance that requires no appraisal. And finally, there's an FHA renovation loan called a 203K loan. So VA loans are backed by the U.S. Department of Veterans Affairs, and it offers veterans and active military members an opportunity to purchase a home with no down payment at all. You're not required to have any mortgage insurance premiums throughout the life of your loan. So no monthly mortgage insurance. And that makes them really attractive for any of you looking to save money on your monthly mortgage payments if you're a veteran. Now, like FHA loans, VA loans typically do have an added closing cost though that conventional loans don't have. And that's called a funding fee. So borrowers, you just need to keep in mind if you're a veteran that when you decide to do this, if you are planning on putting 20% down, then that would be the one outside circumstance where you might not want to do a VA loan. Now, it might surprise you to learn that not every single veteran qualifies for a VA loan. There are some standard minimum active duty requirements that need to be met in order to use your VA benefits. The requirements vary based on if you're a service member or a veteran and when you served. And if you want to find out if you qualify, visit our blog that has a link to learn more where you can find this information on when you need to serve and how many points you need to qualify. And as a helpful overview, the military members who can qualify are typically service members who have served for at least 90 continuous days. And veterans, you'll need to look up when you serve though. National Guard members You just need to meet specific timeline requirements. Reserve members, you also can qualify based on the amount of time you've served. And if you're a surviving spouse of a veteran or a spouse of a veteran who's missing in action or being held prisoner of war, you also may qualify for a VA loan. And although a lot of you qualify, there are still some service members who might not qualify based on the information that you or when you serve, but don't give up. There are workarounds. Reach out to the closest VA service center to walk through with someone to see how you can get your eligibility. And just like FHA, there are also different VA loan types. So there's your VA purchase loan, then you have a VA refinance, a VA cash out refinance. Then they have what's called the IRRL, which is an interest rate reduction loan that doesn't require an appraisal, just like FHA's. And there's manufactured home loans that you can do with VA and VA renovation loans as well. Now let's dig into some of the areas where VA and FHA loans are different. So we're going to walk through down payment, interest rate, the types of borrower, the income that it takes to qualify, property types, and the number of loans you can have for FHA and VA. So the first one, down payment. So what's one of the best features of VA loans? And it's that it requires no down payment. And this gives you as a veteran the ability to purchase a home before you have been able to save up for a nest egg, or maybe you don't want to use the nest egg you've saved and you'd like to use it for something else. I actually have a little VA loan pro tip. So if you're a veteran and you have money saved, but you're trying to decide if you use any of it for your down payment, I want you to go to that blog I mentioned before and look at the table where it outlines the funding fee amount when you put some money down. When you put 5% down on a VA loan, the funding fee is reduced, both if you're a first-time VA user or second-time user. In an example with, let's say, a $200,000 loan, you're going to save around $4,000 by putting 5% down. So if that's worth it to you and you have it saved, do it. And if you're wondering, well, what is a VA funding fee and why do I even have to pay one? So if you're using that VA home loan and you're using it to buy, build, improve, or repair a home, you'll need to pay that funding fee unless you meet certain requirements. So the funding fee is a cost determined by the Veterans Administration, and they collect it because it helps them to fund the whole program where they back your loans and you don't have to put any money down. So it's a benefit that you have earned. And the VA funding fee amount changes based on the disability status that you have on your DD-214, the amount of times that you've used your VA mortgage benefits, and also how much of a down payment you make on a VA loan. And this is different than FHA. FHA loans have what's called an FHA MIP, or mortgage insurance premium, and it is always 1.75% of the loan amount. Even if a buyer is putting 20% down, they do have to pay an MIP charge when using an FHA loan. We have heard rumors that it might be changing in 2023. So that's why you want to keep watching these videos. And for all you veterans, if you have any type of VA disability, you actually will not have to pay that funding fee. It will get waived. Any percentage of a disability that they have labeled on your DD-214. The second biggest advantage of a VA loan is that fact that there's no mortgage insurance, even when you put zero down. And this benefit alone will save you as a veteran thousands and thousands of dollars, even in a year. So if if you're purchasing a home, let's say for $200,000, and assuming interest rates, everything else is the same, the amount of mortgage insurance that would be charged, let's say on an FHA loan of the same loan amount, that doesn't exist for you as on a VA loan, it's about $137 a month. This alone in 1 year adds up to about $1,700. In 10 years, it adds up to $16,440. And over the life of the loan, it literally adds up to $49,320. So the third difference between VA and FHA loans is the borrower's allowed to be on these loans. So if you are getting an FHA loan, these loans, FHA, they were made to help Americans qualify to purchase a home. And they did that by letting Non-owner occupied borrowers assist someone who's trying to buy if they don't qualify. Meaning you don't qualify based on your income, you can ask one of your parents to co-sign even though they're not going to be living in the house as owner occupied. And if their income and assets help you to buy, you can move forward and close on that house. VA loans do not have this flexibility. VA loans are very strict on who is allowed to be on a VA loan. Only you as the veteran and your spouse are allowed on a VA loan. You cannot request to have your fiance, your parents, your children on VA loans. There is one workaround to do it. So if you need that workaround, that would be a reason to schedule and talk to one of the specialists on our team. There is a reason why VA loans have one of the lowest default rates of any loan type in mortgage history. And it's because of the guideline around income that VA loans set. VA loans have what's called residual income calculations. And what it means is they don't just look at and subtract from your income what's on your credit report. They do a second calculation, this residual income, where they deduct out if you have childcare expenses, taxes, all the other stuff that isn't on your credit report. Now I want to dig into the property, what's required for inspections, appraisals, because there is a difference again between these two loans when it comes to what is required of the property. While both FHA and VA do require that safety be one of the most important things, there are some conditions that only apply to one or the other of the two loans. And once again, we have a full chart where we walk you through what the differences are on the property and the types of inspections. We have a single PDF that's right up on the blog that is related to this video. The appraisal, though, is a big piece of it, which I'm going to walk you through. And it's very different for FHA and VA. So when a home goes under contract with an FHA buyer, the house is assigned an FHA case number. So the house would be house 14, and the appraisal is identified with that case number by the house. And the report and the value tied to that stays for 120 days. So that means if Sally goes to buy a house using FHA and it's house 14 and it doesn't appraise, it appraises too low, and Sally walks away and Bob comes and makes an offer on house 14, for 120 days, it has to use that same appraisal. It stays with the house. A VA appraisal is not attached to the house. It's attached to the veteran. So VA loans have some of the most attractive appraisal flexibilities, I think, of all loan types. If the appraisal comes back and the value's low, like in our example before, you as a veteran can request from the VA to review the appraisal, that you want a second appraiser to review the work of the first appraiser. If this second appraiser agrees with you as the veteran, the VA will insure a lender even with a low appraisal. It gives you a second chance and a way to fight for what you want and what you believe. And now we're going to just go over number of loans allowed at one time, because there's a lot of confusion around this on how many FHA and VA loans one person is allowed to hold at a single moment in time. So I'm going to give you the answer here, but then explain the gray areas that a good loan officer can work within. So for FHA loans, HUD does not like one homeowner to have more than one FHA loan at a time. And this is because the FHA loans are made to be used as owner-occupied financing options. So if you have two homes, one of them is not your primary residence. So where the gray area comes in is when you need to purchase a new property and it would be very difficult and maybe not make sense to sell your current home. So let's say you're moving out of the area and you have to move quickly for a job. That's how you can get an exception made. Or if your household size is growing and you originally bought an FHA loan for a 2-unit and now you have more people in your house, they would consider it now in that circumstance. VA loans, on the other hand, encourage veterans to use their VA benefits on more than one home. And this makes a lot of sense for any veteran who might need to relocate quickly or frequently and could lose money if selling their home too soon. Or even if you're moving in the same vicinity, you don't have to be moving out of town. They're okay with you having two. Because VA loans, you can have 1, 2, 3 loans. The amount that you have to put down may change the more loans you have, but VA loans, you are able to have more than one. Now, I'm just scratching the surface with all the information on FHA and VA loans, so make sure you subscribe to our channel. Go check out our blog to learn more about these two government loans that have helped so many people get into homes. But if you'd like to learn more about these loan programs and how our team can help you start the process of applying for a mortgage or asking a mortgage expert on which loan is best for you, then you can click on the link in the description below and schedule a discovery call with someone on our team. This is 100% free, no payments required. We'll be there to guide you, answer your questions, point you in the right direction. I hope that this video gave you the insight you're looking for, and you'll join us for more information on next week's video. And if you know somebody who could benefit from this information, please share the video with them. Hit that subscribe or the bell to get further notifications. We'll see you guys next time.